board our technical expert of the day. We've got Mr. Laxmikant Shukla, technical analyst of institutional research at Yes Securities India, joining us on the Laxmikant, hi, good afternoon. Before I come to you, want to speak about a nifty performer today. That's M&M, doing well from the Nifty pack. And the stock is in focus after reporting a 37% year-on-year jump in total vehicle sales to 1.06 lakh units in June, driven by strong demand across its automotive portfolio. You have got the domestic SUV sales. They've also seen a jump of 28% to 60,400 units, close to that number, while the commercial vehicle sales increased 35% to 26,000 units. The company's tractor business also remains strong, with domestic tractor sales up 12%. So all in all, it's been a good round performance coming in from M&M. And of course, June sales were ahead of the street expectations, reinforcing healthy demand across both farm and auto equipment businesses. So looking good for M&M, stock trading with gains of 2.25%.
All right, that's M&M with gains of 2.3%. But Laxmikant, you picked out IndusInd Bank for us. Banking names doing well. Today also it's seeing an uptick of 1.5%. But on the charts, how does it look like to you? What is the upside that you see?
Good afternoon to both of you. IndusInd Bank has witnessed a strong recovery from its recent low of around 750 and has rallied toward the levels of 955 to 960 zone. Over the past couple of months, the stock has been consolidating in this range, indicating a healthy base formation. In recent days, we have seen the formation of cup and handle pattern on the daily chart, which is typically considered a bullish continuation setup. Supporting this structure, weekly RSI has moved back into the positive zone, while the daily RSI has given a positive crossover, both signaling the strengthening momentum in the stock. A decisive breakout above 960 would confirm this pattern and could trigger further upside, potentially pushing the stock toward the levels of 1040. From a trading perspective, one can consider initiating long position at current prices, or also around the zone of 930 to 935 with a stop loss of 900 on the downside. The risk reward appears favorable, and we could see target toward the levels of 1040 in the near term.
All right, let's move on from IndusInd Bank to the biggest sentiment dampener in today's trading session, and that's KPIT Tech, that hit a series of lower circuits, slumping 15% after warning of a weak Q1 FY27, with revenue expected to decline almost 1% on a year-on-year basis in US dollar terms, and margins seen falling sequentially due to the weakness in the European OEMs. And the company has clarified that the Q2 FY27 revenue will likely be in line with Q1, while reiterating confidence in a strong second half FY27 recovery. Now, separately, around 62.61 lakh shares, or 2.24% of the company's equity, changed hands through block deals at an average price of 375 rupees per share, and the transactions were valued at about 362.4 crore rupees. And following the company's update, JP Morgan downgraded KPIT Tech to underweight from a neutral stance and cut its target price to 550 per share from an earlier 700 rupees. Now, according to JP Morgan, the weakness is primarily driven by spending cuts at BMW and Volkswagen, with BMW contributing about 12% of KPIT's revenue. And on the back of that, even now, KPIT Tech is locked in the lower circuit with cuts of 15%.
Well, big casualty on that stock today. But shifting focus, let's talk about HUDCO. The company is in focus after reporting a strong Q1 FY27 business update. Loan sanctions have nearly doubled to 65,485 crore rupees, which is up 93% on a year-on-year basis. So that jump looking quite healthy, and that reflects a robust project pipeline, while loan disbursements, they rose 28% on a year-on-year basis to 16,377 crore rupees, indicating healthy execution momentum. The update points to continued strength in infra and urban development financing. On the back of this, the stock is up almost 2% as we speak.
All right, let's move on then. Laxmikant, you picked out another name from the financial package, AMC. Tell us on the charts, what are you penciling in?
The HDFC AMC is currently trading near the neckline of inverted head and shoulder pattern on the daily chart. The stock has shown recovery from lower levels, and buying interest has improved in recent days. Technically, the chart suggests that the stock is entering an important decision zone where a breakout could trigger a fresh momentum. RSI has moved above 55 mark, indicating improving strength, while price action has started stabilizing after previous volatility. If the stock managed to close decisively above the levels of 2,735 with stronger volume, then the stock may witness fresh rally toward the levels of 2,900. Hence, we expect positive momentum in HDFC AMC with a stop loss of 2,590.
All right, let's move on then. The next counter in focus is RITES securing 175 crore rupees worth of project management consultancy contract from Baba Saheb Bhim Ambedkar University for campus infrastructure development. The project will be executed over the next 30 months, improving the company's medium-term order book and revenue visibility. And on the back of that, look at the moves right now. RITES is trading at the highest point of the day with gains of 15%.
Okay, very good move coming in on RITES, and of course it's a significant order win coming in over there. Let's shift focus and talk about another nifty company that's a buzz, that's Titan. After M&M, also watch out for Titan today on the back of a very positive note coming in from the house of Citi. Citi has upgraded the stock to a buy from a neutral rating earlier with a target price of 5,075 rupees, which implies about a 15% upside from the current market price. They've also introduced a 90-day positive catalyst watch for the stock. They believe that jewelry continues to be an outlier on the growth and demand front, despite headwinds being seen by the overall consumption sector. The gold price volatility is a near-term risk, but they believe that Titan's brand strength, sourcing capability and store expansion, along with market share gains and improving performance of Carat and Mia, should support sustained earnings growth ahead. They expect the overall mix to improve, and moderation in the growth rate of gold coins and studded mix growing faster than plain gold jewelry should also aid overall mix. So that's another positive that they're flagging off. They also like the fact that there has been a recent underperformance in the stock, and that has created a relatively attractive entry point, is what they believe. And on the back of that, Titan is seeing good gains today.
All right, gaining in trade today is also Eternal. Laxmikant, you picked out Eternal. Solid gains of more than 4.5% today. In fact, in the last 5 days, it has climbed almost at 8%. Do you see this outperformance to continue, and what are the levels to watch out for?
Yes, Eternal rallied about 25% since the low made on 16th March 2026 at 212 levels. Recently, stock has given range breakout above prior month peak with bullish crossover in daily RSI. The momentum is still strong, but one should use dips toward the levels of 268 to 270 for better risk reward ratio. We expect that the stock could retest its 200-day SMA that is placed around the zone of 290, which is the resistance zone. So I think buying on dips is ideal as long as the levels of 255 remain intact in Eternal.
All right, so those are levels to watch out for as far as Eternal is concerned. But let's move on to VATech Vibhag. That's in focus as it has secured a large international order valued between 30 to 75 million USD, which is approximately 250 crore to 600 crore rupees from the city of Vienna for expanding waterworks in Austria. And on the back of this big order win, VATech Vibhag, though, has cooled off from the day's high, but nonetheless, it is still trading with gains of more than 2.5%.
Okay, good move over there, as well as has been the case with Havells, because after Titan, you've got Citi that's positive on Havells as well. Along with Titan, the brokerage house has upgraded Havells too to a buy rating from a neutral rating earlier, but the target price has been kept unchanged at 1,500 rupees per share. The recent correction has improved the risk reward that the company has to offer, and the growth and margin outlook is improving. They see current levels as an attractive entry point for this stock as well, and they say that Lloyd margin weakness remains a key monitorable. And they're also flagging off that cables and wires strength and better pricing support will aid earnings visibility going ahead, and fading lighting deflation and operating leverage will aid their FY27 to FY29 earnings. That's a very optimistic statement, and they also believe that margins will improve with ECD cables and wires leveraging and lower Lloyd losses. So all in all, a very positive note from Citi, a thumbs up coming in for Havells, and the stock is up 2.7% as we speak.
All right, let's move on then. Let's move on to the next counter that Laxmikant has picked out for us. MCX is what you picked out. Good moves coming in there. Also 5% of an uptick coming in. Do you see this uptrend to be intact? Because this one has also been an outperformer. 35 or 36% gains in the last 6 months. So do you see this outperformance to continue? What are the levels that you're watching out for?
Yes, I'm also seeing that this momentum will continue. MCX, after witnessing a corrective decline of nearly 22%, the stock has managed to find a strong support around its 100-day SMA, indicating that the short-term weakness was well absorbed at lower level. The recent sharp rebound from this zone, supported by a noticeable rise in trading volume, suggests renewed buying interest and improving market sentiment. Encouragingly, the stock is now trading above the cluster of its key moving averages, which reflects a positive shift in trend structure. In addition, most leading oscillator are moving in a bullish trajectory, supporting the case of further upside. So we recommend to buy MCX around the levels of 2,940 to 960, keeping a stop loss of 2,840 for a potential target of 3,160 on the upside.
All right, so that's MCX. In fact, today, MCX, there's a note by Jefferies also that they're maintaining a buy call on MCX and they see an upside of 27% on MCX and therefore the rally today in the share price. But let's move on to Page Industries as well. That's in focus on the back of a bullish brokerage note. Citi has upgraded Page Industries to buy from sell and raised its target price to 47,700 from an earlier 34,100 rupees. And the brokerage believes that the worst is behind the company and expects stronger volume growth, price hikes and improving channel inventory to drive earnings recovery. And on the back of positive note coming in on Page, that's trading at the highest point of the day with gains of 5%.
Okay, looking very good for that one. And in fact, we've seen a lot of cheerful notes coming in from the House of Citi today, and that impact is being seen on Titan, Havells, as well as Page Industries. But with that, we're completely timed out on this edition of Market Fatafat. Laxmikant, thank you so much for your time and thanks for sharing your views with our viewers. But with that, it's curtains down on this edition. Thank you so much for tuning in. Keep watching ET Now.